Good evening, everybody. Welcome to this evening's AUDJPY Securities webinar for Forex Trading Live Market Analysis. My name is Duncan Cooper. Right, before we get into it, if you can read through the disclaimer, if you're on our YouTube live stream, I cannot see the chat, but you're more than welcome just to use the link I've given you so you can come into the webinar. Or you can just watch, but I just can't see the chat, so there we go. All right, so let's read through the risk disclaimer before we move along. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm Senior Market Strategist and Trading Mentor at AUDJPY Securities. I'm a full-time trader, been mentoring clients for more than 10 years, trading the Forex market now for more than 15. If you want to contact me, my email is on screen. It's duncan.cooper@audy.com. And if you want to follow me through the week, head our website, audy.com, Market News tab. You'll find my analysis there or on our YouTube channel, AUDJPY Securities Australia, or you can connect with me personally on Twitter and LinkedIn as well. And through the week, our Telegram channel. I'm providing analysis. If you want to get access to that, just contact Nathan. Put his details in the chat in a moment. If you want to get access to my chart layouts for MT4, then again, just contact Nathan. He will organize all that for you. As well, if you've got any questions about accounts and openings, anything to do accounts, then simply give him a contact as well. Let me put his details in the chat. And then webinars, access to the Telegram, access to the chart layouts and templates, it's all free. So if you've got friends, family that maybe have any interest in trading, invite them along. There's no cost. There's no breaking of arms. Don't have to open an account or anything. Just simply come along. Here we go. So contact Nathan if you want to find out any more about Telegram, get access to the chart layouts. All right, his details are in the chat. All right, so I'll just bring my charts up and I might just have a look at what's coming out in the news this week. Now, last week we had a whole bunch of news coming out, interest rate decisions from various central banks. And this week is a little bit slower. However, we've had the Bank of Japan press conference, monetary policy statement today, and they've come out and changed something. They've said they're going to be buying some bonds. And the bigger thing was, I'm just going to pull this other page up. They're going to let their 10-year bond rise from 0.25% to 5%, which I'm guessing effectively is a bit of an interest rate change. So that has sent the pairs to the yen tumbling a good 400 pips approximately. So it's always nice when the central bank is open and gives you plenty of warning what's going on, rather than just coming straight out or tweeting it. So there we go. So on the news front this week, we've already had the Bank of Japan set the market off with fireworks. Not a lot coming out this week. Wednesday, late Wednesday for Canada, CPI data. We've got Thursday morning, 1 o'clock in the morning, USD consumer confidence, and we've got GDP figures for Canada on Friday, 11:30 p.m. and US core PCE price index, 11:30 p.m. Friday. So a few items coming out on the Canada and US side now as we head through the week. And of course, we've got Christmas coming up. So what can definitely happen as we head into Christmas is things slow down, but well, certainly haven't been slowing down today if you trade the yen pairs. But generally, we will start to slow down, get rather range bound. All right. And then next week, you're going to see that I don't think there's any news coming out next week. I won't be here doing webinars next week, but not too much coming out. All right. And then we'll get back into the new year. So there's a few items to watch. So let's get to the charts now. We will start with the dollar index. This is the weekly chart. We'll just drop to the monthly here. Well, we are holding on top of this double top. the dollar yens, or the yen, I should say, strengthening, sent the dollar yen down. So that hasn't helped the dollar index in terms of maybe getting some support here. It has moved fractionally more down, but we are above this double top. So this is going to be the question as we head into the new year. Are we going to, say, for example, this month, hold above support, and then do we have a month up in January? That's what I really think we need to start to look towards. Of course, if we close below by the end of the month, we could be having a further month down. So, all right, so the weekly trend here is still down. We did reject last week after the Eurozone interest rate decision. That gave it a little bit of support. The Bank of Japan isn't giving any support today. And the daily, as I was discussing the euro dollar earlier in the day, showing the dollar index is still showing you lower tops and bottoms. So, it's showing as a higher top or a higher bottom would start to certainly help us think that the dollar index could be getting support down here at 103.82. But at the moment, it is holding above, but is it going to hold above for the rest of the week? I'm just going to have to watch. S&P 500, it has put in I would say a top here. We've convincingly moved down to a lower bottom. This will probably come up now to put in a lower top. So it might move back up to this broken day support, 39.11. So that is starting to show a downtrend. So is the likes like the ASX 200 has had a nice sell-off. So indices are definitely moving down. Maybe that dollar index will get support. So watch the structure of those. If dollar index, if the S&P 500 is down and the dollar index is turning up, pairs to the US dollar should be moving down. So we might start on dollar yen tonight, and you can see there's today. And we were starting to put in a higher bottom, higher top, getting some support at this weekly 79% level. However, we have now moved below this short-term bottom. Weekly trend, I'm still going to say the weekly trend, longer-term weekly look here, until we can break below here, still has the possibility of holding and moving back up. But we'll have to wait and see what the next few days bring now. We've had a very strong sell-off today. So today, there it is. We're probably down about at least 400 pips. In fact, at least 500 pips. We're down about 520 pips today. So we could still have some more downtime. Or, yes, the selling could have all happened today, and then we start to cover tomorrow. So you'll need to start to drop down to your 4-hour chart and monitor. If we're going to continue down, this weekly low here, minor weekly low at 133.62. Intraday today, it is acting as resistance, but we may, start to rally back up. So if you're just wanting to follow the trend, in the most immediate trend that we're seeing, there's the 4-hour chart, start to draw your fib in and look for a 62.79% retracement. Does any of those levels, I'm going to keep dragging that down. If we keep moving down, do any of the 62 or 79% levels overlap with a significant level of resistance on the 4-hour chart there? All right. So you'll just have to keep updating that and then look to see where it rallies back to. We may see an opportunity where we get a nice healthy rally, and then we might put in another 304 pip move down. So more onto the rallies. Of course, I think today, trying to be a seller today now after it's had such a large move. There's always a chance that this massive imbalance here that happened in probably the first 5 minutes on that 15-minute candle there could get completely filled. We may come all the way back up, eventually fill all that drop. All right, so be aware of that. We could fill that all the way back up this week. So, 133.62, which was a minor weekly low, 2-day chart, this is this area here. If we do pop back above 133.62 and intraday, you start to see that offering support, there's every chance that you could trade it back to the upside and see that, yes, this big drop here gets completely filled back up. All right, so there will be the potential to trade both ways. I would need to see some strong intraday price action starting to show that, yes, it wants to move back up, and I want to see the correlation of all the other yen crosses wanting to do the same thing. So there's the potential to trade both sides of the market, but at the moment it is intraday, showing at 133.62 wants to be resistance intraday. So does that remain on a movement back up to it today, tomorrow, or does it flip and do we move above and it becomes support? All right. All right, let's head over to might just start with the Aussie yen and keep moving across. Now, let's go to the monthly chart. As we're heading towards next year, there's always the possibility that this is a very significant top. And we've been topping out up here at the 79% level for a good month or more, maybe 2 months. We've been very sideways on the Aussie yen. From long periods of consolidation, we can get significant trends. So are we going to see a significant top here to move all the way down next year? We'll have to wait and see. There's definitely a 79% level here on the bigger range here on the monthly chart that we're failing at. Now, in terms of the trend though, on the monthly, whilst we're having a very negative month, obviously, from today's price action, we are still in a, I was going to say we are still in an uptrend, but we've broken this low here. So we are actually starting to turn this to down. To correct myself, because I was thinking this was the last low, but we do have this one that we've been forming through this period of consolidation. So we are actually getting a breakdown in terms of that monthly trend. Now, like any time frame, if we are changing its trend, it will come back up at some point, potentially to put in the lower top. So look at the price action here. We move down and then we come up to put in the lower top. Before then, of course, the trend quite clearly continues down for quite probably a good year there or more. All right, even here, see how it comes up to put in the lower top before all this happens. So we don't have a lower top yet, so we could well come down to support down here, monthly support, 86.24, and then see a rally back up to put in that lower top. On the weekly, what we've been seeing is that we already have put in a lower top. We had a 62% failure here at structure resistance. That was really where you should have looked to initiate your trade if you wanted to hold it for the long term. Sensing we might be getting a longer term structure change, but we can't go back in time. So what you'll notice there is that we are at the 127 extension of that structure. See how we move down. We rally back up to the 62 in resistance, and now we're at 127. 162 extension lines up with 86.12 monthly support there. So we could still move further down, but we've got some levels of support now ahead of us. So if you are short or wanting to short, make sure you understand what the structure is and where price could stop moving down. 87.28 and 86.24 there. All right, difficult to get in because we've moved the best part of 400 pips today. Now, more recent pattern, if you've been following the Aussie yen, again, we can't go back in time to execute at the moment, but there was a nice 79% retracement last week up here. And if you did get in up there, it would be happy days at the moment. All right, so this is way overextended. It is not really the area where you want to be shorting, is it? Because this is the profit-taking area. What you should be looking for is if we are going to continue down for several weeks, maybe, where would we look for price to pull back to? You know, you need to see price come back up to a level of resistance now. So in the short term, I will be drawing a fib now across that lower top on the daily to that bottom keep altering it if price keeps moving, and then, you know, look to see if price can give you a rally back up for the next lower top to fall. All right. We've definitely had a shift on the yen crosses to the downside. I don't think I really want to book that trend that we're seeing at the moment. So I will be just looking for price to come back up. You know, we could come back up to this low here now. So that low at 9100. All right. Could jump a little bit above that to the 62 level, 91.31. So we're looking for some form of rally now. Now, whether or not it's going to give it over the next 24 hours, we'll have to wait and see. All right, but don't be a seller at the bottom of the market. Look to sell a rally. You know, this rally up, I know it's hard to wait, but this rally up here, where we had a 79% retracement, took 2, 4, 5, 6, 7 days. I had to wait 7 days for the best entry point. But if you did wait for the best entry point, took the trade, then you would have got a great result. All right, so it's all about patience and waiting for the best level to trade from. So 9100 or the 79% level up there at 92.20. Now, whether or not we can get all the way up to 92.20, now that we're back below the 90 level, we'll just have to wait and see. All right, the Aussie dollar. After spending a lifetime, it seems, trying to change trend here. Let's just draw a fib across this range, this major range. We're probably topping out now up here, potentially. We have broken to a lower bottom. Finally, we can say that we've got a lower bottom. Now, this may well come all the way back up. All right. I'll be drawing a fib in across there. Keep moving it down if price keeps moving down. I might get rid of that fib. So the 62 level, don't know whether we can get up there, is pretty much lining up with that top there, 67.97. Okay. I did a video today saying that we may trade between 67 and 68 on this pair over the next couple of trading days, but of course the BOJ intervention to the market today of sorts has sent the Aussie dollar moving down as the Aussie yen got sold off. So we have broken below 67, but we're heading back up. We may be back above 67 by the end of the day. We're only 15 pips away. So the 62 level now nicely lines up with that 67.97 top there. All right, so that's the area I'm watching for the potential of a rally. All right. Now, as we're heading into Christmas, we may well just stick between 67 and 68, but this does not like it up here at the 68 level, and we're having structure change to the downside now on the Aussie dollar. So looking to sell a rally. You know, when you're on the 4-hour chart here, you're just looking at structure. There's a couple of kind of head and shoulder patterns that could be forming. There's a bit of a left shoulder area here. So price coming up to the right-hand side of that area, which marries up with close to the 62 level in your daily resistance. Or, you know, we could get up, we could have another visit up here and get into the areas of the 79% retracement level, 68.36, which lines up with this area of resistance here to the left. So look at your structure, see if price can get back up to the structure to act as resistance. Slav, you're asking me, do I plan catch the move up? I don't normally trade the upward move if I'm getting set to short it. And the reason why I don't do that is because if I feel like the structure's changed to a downtrend, whilst I might be looking for price to get to a level to get ready to short, doesn't mean that price can get to my level. You know, whilst I might be discussing the idea that this could get back above 67, 67 could become resistance now. You know, whilst I'm planning and looking at, you know, this to come up, in a perfect world to come up to here or up to here. And yes, of course, if price gets up there, you could obviously trade up there. We may get only a short rally. See these 4-hour tops here? We may only get up to there and hold and then want to trade below 67. We may not get back above 67 even. So whilst I'm always looking for those high levels and those patterns to form, I don't normally trade the retracement. I set myself to trade with the trend that I'm seeing unfolding on the higher time frame. All right, so as my last point was, we have moved below, the 67 level here. There is always the possibility of the next 24 hours that 67 acts as resistance and we can't get above. All right. So if you're wanting to go to the upside slab, you really need to see price action get above 67 and see price action like this where it wants to hold above 67. You start to see price action wanting to hold above 67 on a number of bounces, then that will give you more confidence to trade up to the 62.79. Whereas if we don't really see that, I'd be concerned that maybe 67 is going to be resistance and we might not get up to such high levels. So you just have to monitor it. All right, euro yen. All right, well, I was looking early in the day for this to come up to 146.13 where we false broke. I didn't quite get there before the bodge stepped in. So, and then this has dropped at least 500 pips. Now let's just drop to the monthly chart. Similar discussion as I was just saying on the Aussie yen. As we head towards the new year, there is the possibility that we're failing against this resistance area here. We've got a 79% level there at the moment. Are we going to be moving down the range long term? All right, I'm not getting too excited at the moment that we're getting a long-term shift at the moment, but I'm aware that, yes, on the Aussie yen and this pair here that we could be topping out. All right, the structure, the trend here at the moment on the monthly is a bit different to the Aussie yen. Aussie yen has made a shift to the downside, and we may then see that rally back up to put in a lower top. The euro yen has not created a lower top here. This is only coming down. So if this comes down and stops, potentially this will be putting in a higher bottom. And we are at a significant area of support over here. Supports here. All right. 141.04. And I'm just going to put in a fib on that monthly. All right, so, we could come down to 62 level, the 79% level of that range, and then have a bounce back up. You're going to have to monitor that over the next month, but, the monthly trend isn't down yet. Now, there's a possibility that we come down to a 62 level or 79% level of that range, and then we come up and put in a lower top to complement maybe what's going to be happening on the Aussie yen. Sometimes the monthly chart doesn't put in a lower bottom and then a lower top. Sometimes it comes down to a higher bottom and then puts in a lower top. So we'll have to watch how the correlation is going, but we're definitely struggling up here on the weekly at the 146 area. And this is where life gets difficult because we did break above that top at 146 last week. Some of you may have thought that's turning this weekly chart into an uptrend because you were breaking above a top there. But of course, then we're already back below the low here that we formed after the Bank of Japan news today. So I'm just going to take that fib off at the moment. Let's drop it down to the day chart. So I was looking, what I did also notice was last week from that high to low, we've had a 79% retracement failure. I didn't discuss that this morning when I did my Telegram post, but I was aware of it. That was one reason why if we came up to retest 146.13, I was looking for that level to be a failure. So If we can hold below 140.75 today, we may be moving down to 138.69 extension level. And our next level of support, 137.31 down there. It's a bit difficult to get short now, and now it's dropped so far. And you couldn't really sell a rally, or you couldn't sell a rally if you're looking at my level, because on the 4-hour chart, what I was doing was looking at, posted this in the Telegram today, I was looking at the 79% level, overlapping with that top that we failed at last week. And I was going to wait to let price hit it and then see whether it could turn. But of course, price didn't get there. Now, there's every possibility that we could start to correctively retrace all the way back up, like I was saying before, on the dollar yen, or you could have a very strong rally back up, because on all these yen pairs, I didn't show it on the Aussie yen, but on all these yen pairs, you're going to see this 15-minute chart imbalance, and we could well feel the imbalance, okay? So you can monitor that. We may well feel the imbalance over the course of the week, or over the course of the next couple of weeks through the Christmas period. These big drops could well get filled. Now, on the 4-hour charts, in fact, you could start drag. I would be more inclined to draw my fib at the moment from the top and carry it, keep carrying it down. At some point, it's going to have a rally, and then you start to watch the 62.79% retracement levels. All right, it's very difficult to try to work out where price might be going in the very short term in terms of a retracement, because I don't know where price is going to finish. All right, so we're just going to have to draw a fib in. You can monitor a 62% retracement or a 79% retracement. You could also be watching here this weekly level of support, 142.55, 142.55 that we've broken. Price could come back up to that level. All right, price may, now that we're below 140.75, that may well hold on a test to trade further down. It's very difficult to trade a pair once it's collapsed 500 pips, knowing which levels are going to hold, because you'd expect a healthy correction. So if I was looking at just a broken level of support, I will be watching 142.55 as a level rather than these lower levels here, because this hasn't had too much of a correction yet. All right. And selling down as I'm talking. So yes, Slav, you're saying it's a huge drop for 25% rate increase. I don't think that, though, they've had a rate increase for like 20 years. So it's not like it's something that happens all the time. So just the fact that the rate increase has happened, maybe the market is thinking, okay, well, if they're increasing by 25% for the bond market at the moment, maybe they will do another increase, in a couple of months. So is there a bit of a shift, a long-term shift in the 20-year or more policy, which has been pretty much zero interest rates? So that's why it's going to be very difficult in the short term to understand if we are going to start to retrace back up inside these drops, or is the market just going to go like sell, sell, sell at the moment with the news that's come out. So you just want to, use your analysis that you logically use. Can we start to see a retracement back up to a 62% level, a 79% level, or at least a key level of broken supports? All right, the bigger level that we've broken for sure today is there at 142.55. A significant level is also 144.26, which is that top over here. That's a monthly top here, 144.26. I know we're like 400 pips away, which you may think we can't get back up there, but we dropped 500 pips today, so we can certainly rally back up 400 pips. If we can drop 500 today, we can rally back up 400 pips for sure. All right, so you just look to sell a rally if you can get back up to a logical level at the moment. All right, euro dollar. Are we topping out on the euro dollar? Okay, On my other charts, we've got the MACD. I did an analysis on this pair today. There's day chart divergence here on the MACD. I'm going to cover MACD tomorrow in a webinar lesson. We crossed down. There's a bit of divergence there. I think so, having a bit of positive bounce today with the effects of the Japanese news, but all right, go back to my other charts. And of the range for the whole year, we failed just fractionally short last week at the 62 level. So are we putting in a significant top here? We are holding underneath this low over here, which is a monthly low, 106.35. We're pretty much trading there right now. All right. So on the day charts, we can't yet structurally change this to down. We are potentially putting in another bottom here, which is helpful because then we don't have too far to go before we could maybe break below a bottom. So we're having an inside day at the moment. Yesterday, we just had a day down. We couldn't take out Friday's high. So there's every chance that we may just pop above a high day today. And then we could reverse below this area and start to have a lower top, lower bottom scenario forming. That's what I'm looking for. A structural change like we're seeing on the Aussie dollar, that we have a lower bottom, a lower top in play. If we start to see that, and as I was saying, we're maybe failing at the 62% retracement of the current year's range. This could be a significant monthly top for a long-term move down. But we need a structural change. So, or you could be on the buy side, but we are struggling at this resistance area here. Monthly resistance at 106.35, weekly and daily resistance 106.15 and 106.01. All right, some tops over here. So are we topping out here? That is the question. We have been breaking down over the last couple of trading days, but today we're popping back up. You can see the candle going up. So I'm just sitting on my hands. I am looking to structure something to the downside if I can see downtrend structure forming on the day chart. Now, we may pop up. I could be drawing a fib across there. You know, I could be looking at this to be maybe a left shoulder here. 79% level to the right hand side here, 107.01. So if we get up to 107.100, that would be a good level to watch for an intraday failure. And, you know, looking for a move. That's your move down at the moment, assuming that we continue up. And then looking for a top to form equal with that top for a right shoulder to move down. Now you can see we are rather range bound. And you know what? We may just stay range bound all week. We're heading into Christmas, all right? And what I am seeing on the 15-minute chart, let me get rid of that fib. I can always put that back on if I need to, if price gets up to a higher level. The range that we're trading in at the moment, that was yesterday's range. All right, with it, we do have another range here. So what you can see, obviously there, hopefully we're at monthly resistance, 106.35. And there's a 7% fib of the intraday range we've been forming today. So that's not actually a bad area to take a trade at. You're at monthly resistance there. You know, that area there. So if you go back to the high time frame chart, last week we false broke that area. All right, there's that monthly low there. Last week we came up, rejected that area. This week, maybe all we can do is what we're doing right now is just nudge above it. And we're right at it right now. You know, trading at that level with a 100 pip stop gets your stop at 107.35. It's not quite above last week's high, but you know, maybe we can't get up to last week's high this week. And then we simply trade all the way down. Well, it'd be great if this is a significant topping area. You know, let's go to the monthly chart. There's a significant monthly low that we traded down and through this year. Maybe that is now resistance on a rally to trade down for the rest of next year. All right, you need to work out whether that marries up with your thought process. But at the moment, back to the 15-minute chart, off that range, there's a 79% level. All right, if you wanted to trade at that level for the long-term move down, you can just put your stop above that top. You would need to be, you're only risking like 20 pips. It's a great risk reward if we can't move above 106.35. All right, so that's one option. My preferred option would be the first one that I showed you. My preferred option would be, let's get rid of that fib. My preferred option would be that range on the 4-hour chart I was showing you, looking for the 10700 level, but price might not get there. Price may just fail where it's failing, right where it's holding right now. So you need to make a decision. All right, I am going for the higher level, but that level I'm just discussing on the 15-minute chart could obviously hold today. All right, pound yen. We've had this long period of consolidation on this daily chart. And I actually thought for a while we were moving higher up here. But we did put a rejection candle in on that day. And we traded down. And Edwin, I don't know whether you got in on that. We were discussing this last week up here, where in my review of the previous month's price action, where we had a failure at resistance and we fell down, came up to 79% level here, fell down, came up to the 79% level here. I was putting out the same thing last week. We came up to resistance, we fell down. Would we have a 79% retracement once more to move down? Now, if you did take it up there, stop above the high, you'd have a smile on your face now because it must have dropped at least 500 pips. Okay, so Edwin's telling me he got in for 50 pips. And he got too cautious and didn't hold on. So, you know, 800 pips at least has moved down from that level. Now, of course, you may not grab that, but if you were trading the failure resistance here, trading down to support, it would be very annoying if you had your target order sitting at support there, which you may do, and then you got out. But if you're just holding to see what was happening, well, you would have a smile on your face. So it is nice to see that the 79% retracement held there, because it worked 3 times in a row there at that resistance area. All right, that's just purely looking for a fib pattern, hitting resistance, failing, trading the 79% retracement. It's happened once, twice last month, and in this month it represented once more. All right. And well, you only need one of those trades a month, don't you, to be profitable long term, if we can get one of those every month. All right, so of course it's overextended at the moment. That's just what has been happening from the analysis point of view. This is a significant low here, could hold in the short term. So I really think you need to be looking for some form of rally. So I'd be dragging my fib, monitoring the fib retracement. I'll be monitoring these levels of broken support. So you've got a level at 163 here, a level here at 164.28. Again, like the other yen pairs, you're just going to have to watch to see where they pull back to. All right, so get your fear in. Monitor the support levels that could act as resistance now. I'd probably go for the higher level. We were spending a lot of time getting support along here at 164.28. I'm sure if you came back up to that level, there's going to be plenty of sellers there because there'll be plenty of people that are long that haven't cleared their positions that were potentially buyers at that level. And now we're clearly falling straight through. So they will want to shift their positions from being in a buy to getting out or getting into a sell maybe. So watching 164.28 could well be strong resistance for another movement down. At the moment, that is, very much overextended. Pound dollar. So all these pairs to the US dollar are trying to break down their price action. This is looking relatively similar to what I was just discussing of the euro dollar. So here is the range for the year. 62% failure. Now, I was discussing that when price was back here. I was discussing like a month ago. Could we get up to the 62 level? What if you just traded at the 62 level with a 100 pip stop? Would you be smiling right now? All right. So like I discussed, the range of the month or the range of the week, it works for the ranges of the year. And here is a prime example. All right. Now, will it come down now to the 10300 level? And, wouldn't it be awesome if you traded there or you even got short, over the next 2 or 3 weeks, if this starts to break down and we now trade down like so into next year? We get that movement down next year. All right. Will it do that? I don't know. It's very difficult to create a long-term forecast for a whole year when fundamental analysis comes to play and changes things. But, this could well happen if the technical analysis holds true. All right, but so in the short term though, what we would like to see on the day chart is a structural change. We have broken below this low. So the day chart structure is starting to break. All right. And we're on a bit of support here at the moment. Day support, getting a bit of support from trying to break below that low. So like I was just showing it on the euro dollar, looking for price to come up to put in its lower top on the day chart. So coming up to the 62 level, that overlaps with all this resistance that we will try to move through. 122.93 is weekly resistance. 122.76 is daily resistance. So weekly resistance is that top there. So coming back up to that top, to the daily, is this top just here. So coming back up to that area and holding, we could come up to that top here and put in a kind of a left shoulder, head and shoulder pattern. That's at 123.45. So that's that level just there. That would be a nice level, whether or not it can get there. And then, close to the 79% level. I would look to try and trade the 79% level. See how that was resistance. It became support through here. Will it be resistance over here to put in a lower top based on the day chart? Putting the top up there. So I'm going to be watching up there. Can we get up there to fail? Okay, I don't know. We'll have to wait and see. At the moment, we're, day support's at 121.06. It is offering some short-term support. So we might get up there. And some of these levels I'm discussing may not come this week because of Christmas. It might come in, it might just get up there next week. Or what you can also see is how we're getting a little bit range bound here. We may just start to be range bound like this now, all the way leading into Christmas. So you're just going to have to watch what price is doing. All right, but yeah, I'm going to be watching up there. So that the exact level of that top In fact, I'm telling a fib, but that's not the day chart top, that's the 4-hour top. Let's just restructure this a moment. That top there, which could be a left shoulder, head, coming up to put a right shoulder, that is at 123.45. Let's put a line in. All right, there's actually the top I was discussing. There we go. All right, so watch that 123.45 level up to the 79% level. Can we get a head and shoulder pattern forming up there? All right. I mean, that is definitely worth engaging in my mind because of that weekly, you know, where we're at, the whole structure where we're at within the range of the year. You know, trading up there, trying to hold it for the next long-term move down. That offers you great risk reward opportunity. And those sorts of trades, I've got a few things on that chart. So I'll go to my other charts, you know, to the weekly. These trades don't come around every week. There's the range for the year. If we're playing it at the 62% retracement of the current year's range, and to move down to test the low of this year, next year, you know, these sorts of setups don't happen every week, do they? They only happen once a year. You know, we only usually retrace back inside the candle of the year once in a year before we form the next year's candle. So this might be the opportune time to, yes, look for an opportunity to get short for the big move down, if that is what's coming around. All right, New Zealand yen. Now, I'm sure, I don't know if anybody sold up here, but I was discussing this top, said it could be resistance because for 9 months, we haven't been able to really get above this top. This was a false break of that top there. So let's drop to the weekly chart. That top there, we false broke. We've been very range bound, putting lots of tops. We tried to move above here, and of course, we've collapsed down today. Now, the monthly charts, very much like the Aussie yen. Now, the structure here on the monthly chart is up. It's not on the Aussie yen. And you're going to see we're at 79% area. So I did say this last week that we're at very high levels for the New Zealand yen. Equal top to this top over here. All right, so when you're looking at historical price action, that is back in 1997, all these historical tops are of major significance. You know, when you look at the New Zealand yen, these tops are very expensive, extreme expense at the moment. So where we're at here, when we look left, that's extreme expense. Down here is excessively cheap, okay? So if we were down here, you should be thinking that we would probably reverse back up because we're at historical cheap rates. Whereas up here, we're at historical expensive rates. All right, so whilst fundamental information can definitely drive this high above highs to higher historical levels, you have to look at when you're at historical levels that the market just looks at it as, you know, it's expensive. All right, like buying anything else or selling anything else. You know, if something gets up to a very high level, you like, you know, if you bought your house for $200,000 and it's worth $1 million, there's definitely that tempt to sell it because will it be at $1 million in 2 years' time? All right. So this is the exact same thing. Same psychology. Now, are we going to get a massive decline? We're going to have to wait and see. But quite clearly at the moment, it's very heavy up there at the 87, 86 level. So I think we've probably got up to the 88 level last week. So at the moment, we could get an intra-week bounce at 83, 84 here, you know, draggy fib. see if we get a rally back up. All right. And, if we continue down, I would expect to bounce down here because this has been strong support. So we are at strong support level here. And, you may be more aggressive than I am. I don't like to go too much against a trend. Strong trends are unfolding, but we may well start to form an area of support here. And as I've been discussing, we could well fill these drops. There's a massive imbalance there. All right, I'm very aware of these imbalances at the moment. Maybe we're going to fill the imbalances and then trade back down once more. All right, so you're going to have to make your own personal decision what side of the market you're prepared to trade on when we're seeing these very large drop downs. But we may well see this hold here. See, it's been resistance, the support. We could form a triple bottom here. And depending on your viewpoint, so this is just using analysis tools, we're probably getting close to a 62% retracement of that range, and the monthly trend is up. All right, so on the monthly chart, that's the monthly low to a fractional higher top. So this maybe is going to hold its trend just where we're sitting on support here. Look left, there's monthly support to the left. All right, so there's definitely two arguments to sell and arguments to buy on this pair at the moment. All right, we don't have a higher time frame monthly chart structure change. We could still keep this range bound environment on the New Zealand yen. All right, so you can definitely watch around 83, 84 for support. If you want to be trading to the upside, you might start to see price action holding here. You might be able to get a tight entry to trade up. We're definitely maybe having a bit of a fundamental shift though for the yen. So, do you want to go against that fundamental shift at the moment as the market absorbs it? As the market absorbs it, the selling that we've been seeing may further unfold. So we'll just have to wait and see how price unfolds, all right? It's a bit difficult on the yen pairs at the moment following today's announcement. New Zealand dollar. This is like the euro dollar, like the pound dollar. This is the range of the year, 62% level. Heavy rejected last week. Double top, maybe forming here. Rejection, 62 level. Okay. Day chart. It is just breaking the structure, like I've been commentating on the other ones. So again, just look for a rally. Can we get maybe a head and shoulder pattern forming here? Can we come up to that left shoulder here? That's at 64.42. $62 level of that range is at 64.32. So, that level just here. All right, that's the area. Around about 64.32 up to 64. What did I say? It was 64. The exact top. 64.42. Okay. 64.32 up to 64.42 there. Can we get up to that level? Can it form a head and shoulder pattern? That right shoulder will be potentially forming if it comes together. The first lower top on the day chart. So are we starting to see a breakdown of these pairs versus the US dollar as we're heading into Christmas, heading into the new year? All right. All right, dollar Canadian. Let's just have a look at the day chart here. It's getting a bit flat and range bound at the moment. Now, down to the weekly, we got good weekly support here. Coming up to 137.15, which is weekly resistance here. 137.92 is weekly resistance. So 137.92 is monthly resistance, and that's weekly resistance there. So on the monthly, Monthly trend is still up here, but we have been discussing the possibility of this being a left shoulder, head, right shoulder. Not seeing a shift in trend on the monthly at the moment. Still got a higher bottom to a higher top. Potentially, we could be putting in a higher bottom here. It needs to do some work here. We need to have a month up. The weekly trend is still holding its trend. One thing to watch here is see how we're holding here for 3 weeks underneath the 13700 level, 137.15, their weekly resistance. You know, I'm just eyeballing it, but I'm pretty sure that's a 62% retracement. There is always the possibility that we're going that way. You can just monitor. The problem with this pair at the moment is, let's just take that fib off. I'm just going to go with the idea that the high time frame trends are going to rule what's going on. Is being a buyer up at this level doesn't really work because you're at resistance. So supports, day supports here at 135. There's a higher bottom here at 135.18. So if you want to trade it in line with the trend, that's where support is, 135.15 down to about 13500. And we are heading into Christmas. There is some more Canadian news coming out, but we could just stay range bound in between here, support and resistance for the whole period of Christmas. Okay, so you can't trade it down from resistance because we've already failed there, but you could be watching support down here to trade back up. All right, so it is a bit range bound. Today we have come up, we've already failed, so we're already almost in the middle of the range. So watch support down here to be support to trade back up. All right, the weekly trend is up, the monthly trend is up at the moment. So look to trade it to keep in line with the trends. So, you know, look for this to come down. Trade back up. All right, last one, gold. So not easy gold at the moment, is it? Higher time frames, monthly trend is actually down. Coming up, I'll be coming up to put a lower top. Coming up at the moment too, some historical highs over here. So that monthly rally on the weekly chart is an uptrend. There's a higher bottom to a higher top. We are struggling at this top, 1807, so approximately 1800 level. We had obviously a weekly rejection there. Are we forming a kind of a double top here? On the daily at the moment, we are obviously rallying back up, but we're rallying up at the moment from a lower bottom. Like I've been commentating on the pairs to the US dollar, there's a potential there for a head and shoulder pattern. Left shoulder, head, coming up from a lower bottom. We're at that level right now. All right. What I always, you know, if you want to engage on this, trade it like a head and shoulder pattern, it would be great trading also at 79% level. There's 4-hour tops up here as well. There's another top here. But you're pretty much right now at, well, you're at that weekly level there. So that level, that top just there would be the left shoulder for the pattern. 1810.10. All right, so is that a left shoulder? Is that a head? And now we're going to form a right shoulder over there. So we had a nice rejection on the weekly chart last week. We have on the day chart moved down to a lower bottom. Are we coming up to put a right shoulder in here to move down? You can decide if you want to engage at that. Slav and you trade gold. What are your thoughts? Are you watching that, or are you just sitting on your hands? What I can also see, just breaking this down into other fib ranges, whilst we're heading up maybe towards that 79% level, there's a fib range here. So there's a run up, pull back, the 162 extension of that range here lines up with 79% level too, lines up with that resistance to the left there. So that's a nice confluence level. All right. It's not a perfect looking, but if you want to go and Google it, it's what I would call a Gartley pattern, but it's not a perfectly constructed Gartley pattern. Gartley pattern, if you want to go and have a look, is you have a move down, and then within the retracement back up, you get this kind of movement. Often this movement up here is let me draw it perfectly for you. So often what you'll get is two waves within, as we're rolling back up, price comes up, and then it might pull back to the 62% level of that retracement. And then it comes up, and the 127 extension of this range, this upward move, lines up with the 79% level, like so. And then you expect after that, that price then goes down this way. So we've got a similar looking example there, but it's not a perfect looking example. That is the perfect looking example. It's called the Gartley pattern, Gartley, I think it is. If you want to do some work on that over the Christmas period, that is a very good pattern to look for. You can combine it with the 79% retracement. So if you're bored through Christmas, just go and Google the Gartley pattern and see whether you like the look of that, see where you can start to find it on your charts. All right. So gold might be putting in a head and shoulder pattern there. You can monitor it, see whether you want to trade it or not. And quite a number of those pairs to the US dollar could well form a head, kind of a head and shoulder pattern if they're coming up to put a lower top on their day chart. So just keep monitoring. Price could get very range bound though over the next few days. Of course, we've had fireworks from the Bank of Japan today. Let's just see where the dollar yen is at the moment. All right, it is having an uptick on the current candle, down at 132 today. So we've had a 500 pip move down at the moment on the dollar yen. But we could, you know, if we start to move back above here, back above the 79% retracement level, we get back above the 79% retracement level by the end of tomorrow. Is that positive? Because maybe, you know, we've just false broke below the 79% level and back above the 79% level. Is this just still trying to find a base here at the 79% level to go higher? All right. So we'll just have to monitor. And just to finish up, of course, I said I was looking for the higher level on the euro dollar, 107, if we can pop up over the next few days. But maybe we can't. Quite clearly at the moment, we're holding at 106.35 monthly resistance in that 79% intraday level there. All right, if you trade at that level, you're already in profit at the moment. All right, everybody. I'm giving you my levels that I'm watching at the moment and the patterns that I think may be unfolding over the next few days or through the Christmas period. I'll be getting a topping out process on the pairs to the dollar. Some of them are already starting to put in a lower bottom. Can they come up and form a lower top? All right, tomorrow on the webinar front, I'm going to go through MACD and divergence. More analysis on Thursday. We can see whether the market still got any movement going with it and anything forming on Thursday. Then I'm going to have a break till the 4th of January. So the 4th of January is a Wednesday. Going to go through and review last month's patterns that were forming. And then we get back into it for the new year. All right, so a couple more webinars to go before I have a bit of a break. So hopefully if you've still got the time, if you're not busy shopping, then come and join me on Wednesday, Thursday. Same time as usual, just come to the webinar page to register your interest. Other than that, we're getting into the silly season, so hopefully stay safe. Look after yourselves and your families, and I look forward to seeing you next time.